All right, so I have a scary bank story to share with you guys about someone trying to buy some precious metals and their bank actually stopping them from being able to do so. And then I also want to talk about protecting our wealth against bank bail-ins. This is compared to the bank bailouts that we got after the great financial crisis. Many folks understand that, but there was actually a change to the Dodd-Frank rules that is actually enabling them to do bank bail-ins. So instead of the federal government and the taxpayers bailing out the banks, it's going to be your deposits, your cash money that you got sitting in the bank that you think is your money might not be the case. So we're going to break it down, guys. Scary story in regards to precious metals and the banks blocking it, and then the difference between bank bail-ins versus bailouts. Protecting our wealth in 2023, we have to have a different mindset. For me, I go risk on with cryptocurrencies, digital assets. I also focus on my business. How do I make more money? Because I understand that inflation is not going away. And this was confirmed by the CPI data that came out yesterday. That's fantastic. We understand that we're losing our wealth through inflation and the cost of everything going up. But we need to talk about what they've set up here and what they're doing to stop folks from picking up the suppressed assets. So it's not just the banks in the system giving you a hard time buying your cryptocurrency. They're also trying to prevent you from picking up precious metals as well. And now I'll have the link on down below. If you guys want to buy some precious metals from my good friend Andy Schectman, Miles Franklin, we can help you do so. But I wanted to share this story that he was just sharing on the Economic Ninjas channel. So huge shout out to Travis, Economic Ninja. By the way, Travis is a big XRP Army guy. He was kind of low key about being in the XRP Army, or maybe he just didn't talk about it that often. And I had heard from a friend in our community that he was actually big into XRP. Now, I've seen him make a couple recent videos about XRP, but he caught my attention here today. He dropped an interview that he did with Andy Schectman, our good friend, owner of Miles Franklin for 33 years. He's been providing stand-up service in the precious metals area. And he was sharing a story of someone who was trying to buy $50 million worth of precious metals from Andy Schectman, Miles Franklin. And the customer's bank was actually holding them up. And they were saying that they were going to have to run this by compliance to make sure that this was a legitimate purchase. Now, this person ended up getting their purchase order to go through, their wire transfer for $50 million. I don't know if it was gold or silver, maybe a little bit of both. Eventually, they were able to get the wire to go through, and they were able to purchase their $50 million worth of precious metals. And they actually asked Andy Schectman to share that story because I think it was a lady. She wanted folks to understand that the banks are starting to give folks a much more difficult time when it comes to purchasing precious metals. We've already seen this in the cryptocurrency digital asset space. We understand it's always a pain. We have, 6 different exchanges. You got multiple banks, multiple debit cards. You're buying pay-as-you-go cards so that you can figure out a way to load up these exchanges to be able to buy your digital assets. Well, now we're going through similar issues when we're trying to buy precious metals through their banks. And we're hearing more and more stories of folks that are being brought aside. Are you sure that gold's now's a good time to buy precious metals? Are you sure that you want to do this? We're seeing, this wire transfer of $50 million getting held up. And Andy Schectman was sharing that not only are they trying to stop you from doing so, but the reason why they're doing this is because the outflows of deposits out of the commercial banks. It's not just the small and regional banks, it's the larger commercial banks as well. And what these big money folks are doing is they're calling up the Treasury direct to buy their Treasury bonds. And they're also calling up our good friend Andy's team to pick up some precious metals, and they're getting their money out of the banks, right? The reason why they're doing so is because the change to the Dodd-Frank rules, and in particular, we're talking about Title II. It's called Orderly Liquidation Authority, OLA. So it's Title II of the Dodd-Frank Act, which was the Dodd-Frank Act was passed after the Great Financial Crisis, which allowed for bank bailouts. So that was the taxpayers, that was the government bailing out the banks, right? Now, what they did here, and this was under the Trump administration actually, was in 2018, the amount of cash reserves banks were required to have under Dodd-Frank was lowered with passage of the Economic Growth, Regulatory Relief, and Consumer Protection Act by the Trump administration. And one of the notable changes of this was to limit the circumstances under which OLA could be used to bail out failing banks. So essentially what Trump and his administration and what they were trying to do with this was not have our government, not have the taxpayers being forced to bail out private banks, but putting that responsibility on the banks themselves, like, as it should be. Banks who give out bad loans, should fail, and the clients, this is part of a free market, who deposited their money there, the responsibility is on them. And at the end of the day, you have 250,000 of FDIC insurance. And now, with these most recent passage of this change here in 2018, now you could be responsible for bail-ins. So they're going to take your deposits to bail out or to adjust their balance sheet. And we've been talking about these banks' balance sheets, how they're not looking pretty. They have over 600 billion of unrealized losses on the bonds that they're holding. And they have over, $1 trillion worth of commercial real estate that has to be reset by 2025. So it's a dicey situation for these banks. And we've been warning folks about, this issue that the banks face. But to take it one step further, at any point, you think that you have $1 million in the bank. That's not, you are a creditor, right? And so you have a lot of counterparty risk when we look at all of our options for where we could potentially put our money, right? We have counterparty risk when we keep it at the bank, when we invest in a cryptocurrency project, we invest in a stock, even when we invest in treasuries. Treasuries just had their worst year in history last year. 2022 was the worst year ever for treasuries. So when we look at our options, where can we put our money? This is why it's gotten so much more attractive for the precious metals, and why folks like this client was trying to move $50 million into precious metals through our good friend Andy Sheck and Miles Franklin, is because there's no counterparty risk. You're not going to have to worry about a bailout, bail in. You have no counterparty risk when you store this wealth in your vault, in your closet, wherever you're keeping it, under your mattress, burying a treasure chest in your backyard, whatever it may be. You have no counterparty risk. And the other thing that we've talked about in the digital asset space is that when you have decentralized cryptocurrencies, decentralized digital assets like XRP, you have no counterparty risk, right? You do have counterparty risk when you keep it on exchanges, but when we self-custody, we remove that counterparty risk. And so for us, although I do view XRP, other digital assets, to be it's on the risk on side of my portfolio, at least I know I have no counterparty risk when I'm holding my XRP in a self-custody wallet. Just like I have no counterparty risk when I'm stuffing a little bit of silver under the mattress or in the vault, right? And so I just want folks to understand how dire this situation is getting with the banking crisis, how much further we have to go. I covered the news yesterday. It's not looking good for the cryptocurrency space. FTX has $3.4 billion worth of digital assets that they're going to be potentially offloading. Not good. And then I covered how the Fed is going to continue the rug pull by, i.e., raising interest rates further because inflation is not going away and it's getting worse. Well, the good news about how we've positioned ourselves, we've removed counterparty risk, but we've also hedged in protecting ourselves against inflation. One final point that I want to make on precious metals. In the West, here in America, we see where gold and silver is trading at, and that's mostly a large reflection of how paper gold and silver are being traded on the COMEX. Now, when you look over in the East, Shanghai Futures Exchange and the other markets over there, those prices are largely driven by the physical metal demand. And so we have an arbitrage opportunity right now, a discrepancy where over in the East, the demand has grown and it's being actually shown on these exchanges where gold and silver is trading at a premium versus the US dollar pairing and the US dollar markets, in particular the COMEX, where, gold's still trading sub 2,000 US dollars. When you look at what gold's trading at over on the Shanghai Futures Exchange, it's actually over $2,000 an ounce, and it's well approaching new all-time highs on those exchanges. So, for example, in the cryptocurrency space, right, you see, Bitcoin's trading at different prices on the various different exchanges. The same thing's taking place over here, but you have the actual physical demand dynamics playing into those price actions, and that's why you're seeing gold approaching new all-time highs over on the Shanghai Futures Exchange and these other markets over there in China versus back home on the COMEX. it's still trading more closely to that